Hey guys, and welcome to another video here at Financial Hub. My name is Caleb, for those who do not know me, but I prefer to be called CK, or many of you know me through my Instagram handle, Caleb Sami Trades, KST. So welcome to today's video. Today I want to do a market analysis. A lot of you enjoy this market analysis, helps you improve your sort of insights, understanding of the markets, and this is something I talk a lot about, and I enjoy analyzing the markets. For me, it's like trying to piece in two puzzles or puzzles together and try and get that bigger picture of what is actually happening. When you get it right, you make money. When you get it wrong, you lose some money. When you don't understand what you're doing, or when you don't understand how the pieces fit in together, you do nothing and you just stay neutral. For now, I'm more or less neutral. I don't have many trades running. Actually, I have none running. I'll talk about a trade that I had, which was my first trade that I took this month on US 100. Last week I had bought, but last week also we saw one of the biggest drops in trading history. We saw Nvidia losing almost $300 billion off its net worth last week. Okay, I think that was just on a single trading day. I'll confirm that, but we saw it lose a lot. This is the biggest loss of a company in history. Many companies don't even reach a valuation of $300 billion. And I think this was just about 10% or 15% of the company. You can imagine how big that not country, but actually how big that company is. It's as big as many countries. If you look at the GDP of Kenya, the GDP of Kenya is 107, $110 billion. That is our gross domestic product. This company called Nvidia and many others are worth more than $1 trillion. So you can imagine how big these companies are, and that's why I'm even confusing them with economies or countries, and this is what we are striving to become. Another thing happened last week, which we should applaud this person, okay? Our very good friend, and trust me, is a very good friend of ours, Warren Buffett. His company just achieved a milestone where they finally achieved a market valuation of $1 trillion. Why do I say this, and why do I give him this applaud or attention? It's because he's in finance. He's doing the same thing you and I are doing. He has a few other things that go on the side, like insurance and all that, but other than that, his main primary focus is investing in valuable companies, companies that he finds the value is less priced, and he jumps into those. Okay, his good friend Charlie Munger just passed on. Was it last year but one? And Charlie Munger changed the mindset of Warren Buffett. Warren Buffett used to only invest in established companies that have been there for a long time, companies that are very good, have a good product, but are very undervalued. And that's what he used to do. So he used to invest in Coca-Cola, Bank of America, and such stuff. But Charlie Munger, his good friend, came and advised him and told him, Warren, you know what? Why not invest in things like Apple? Yes, you might see his valuation is high, but look at the product, look at the company. What's the company doing? What's their core? What are they actually selling? Are they selling phones, or are they selling a certain emotion that people need and people need to buy? That is business. And Warren Buffett changed, and these days is one of the biggest stakeholders in Apple, owning, I think, around 150 billion worth of shares in that company alone, and owns about 5% of the company. So he's a big shareholder in such companies. So yes, so check it out. Look up Warren Buffett. He's done this thing the same as you and I, just over many more years. But this is just to remind you, the dream is possible, guys, as long as you're doing it nicely, as long as you're not doing signals, as long as you're not doing robots, those fake stuff, as long as you're not trying to get rich quick, as long as you give this thing time, do it the right way, have proper risk management. That's what we emphasize on. If you're part of my students, you know we always emphasize on this. Have right psychology, read proper books. We have multiple books in this office. Focus on those things. So that was on a light note. I just wanted to share that and remind you why you came into this business. It's very possible, and if you do it the right way, if you try and get rich quick, you'll get rich quick. We've seen many of these people online, and some of you even follow them. But this is a fast way to also crash, okay? Easy come, easy go. So take time, understand what you're doing, dive deep. I really like my students. Most of my students dive deep because we teach them the right thing. And that's what we tell you. Come and learn from the good people, the people who are teaching the right stuff. I'll never tell you that you'll get rich in the next 2 months. But if you do this properly, there's no other course, there's no other career that takes you only 1 month and you're very good at it, you're milking money. If you go and study law, engineering, every other career is very much respected, except the forex industry. Forex is a very good industry, but because you don't understand what you're doing. Ken shared a video the other day of the Eldoret Forex scam. I hope you've watched that video. We shared the story of the lady who also conned people a big amount of money, not in forex but in investments. Understand what you're doing before you invest, before you start trading. So that's not the story for today. Today I want to talk about the markets. I want us to analyze the market, see what's coming, look at the trade I had running last week. What happened to that trade? What am I doing differently this week? Am I even doing anything different? You know, most of the time when people lose on a trade, they start saying there's something wrong or something they did wrong. No, there's no system that gives you 100% returns. So it doesn't mean all the time because you lose, you're doing something wrong. So don't always fight the markets to give you something wrong. What I normally do myself, I normally take my trades and look at them every quarter. I never look at them weekly or monthly, no. Every quarter I compile all my trades. This quarter is coming to an end. We're about to enter the fourth quarter and end the year. But as September comes to an end, I'll compile all my trades for July, August, and September. Look at the common factors. What are the common mistakes? What are the common good things I did? And how can I now do away with the mistakes and improve on what I'm doing well? Okay, that will help me increase my success rate and such stuff. So for today, we can jump first into. Yesterday we had the Apple event where they launched the iPhone 16 Pro and the iPhone 16, the Apple Watch 10 series, the AirPods 4, Apple Watch Ultra 2, AirPods Max in fresh colors, and AirPods Pro 2, and much more other stuff like the Apple Intelligence and such stuff.
Are you interested in joining our Forex Masterclass program? Here at Financial Hub, we understand that at times taking a big course is a big undertaking, and that's why we offer a free trial for the first 2 classes of our Forex Masterclass. Financial Hub Forex Academy is located on 4th floor, Chandarana Building at Lavington Mall, Lavington. You can also find us on all social media platforms as well as through our phone number. So feel free to inquire at Financial Hub Forex Academy when we have a new free trial, and join us for our classes. See you there.
Now, does this help the valuation go up or not? We can never know. When they just launch something, we've not experienced it. So many people think this phone is going to be out of the world. This doesn't affect the markets. This is just on a different note, okay? I know we don't talk much about stocks, but it's also important to pay attention to them. So yesterday the stock came out. We saw the market fall a bit, then close a bit bullish. So you can see this candle yesterday. If you know how candlesticks are formed, we had a bit of a drop to the downside, then markets closed up. It's never that much of a bullish data or a bearish data. It's just a normal day. It's like a new product has just come out. So we need to see the product, how it works, how it's going to be doing shipping, the sales that are going to come from it. Those are things that will give it value in the long term. For now, we can't know. So we're sort of in limbo. So I just wanted to mention that so that you get to see. We look at stocks, Nvidia. We are not just looking at Forex. It's important to look at the economy as a whole. Look at politics. Elections is coming in the US. This is a great, and trust me, a great factor that will affect most of the markets. The cryptocurrencies, the currency markets, the commodities, the bonds, stock market and indices, all those are going to be affected. And more or less you're going to see a lot of, because people are not so sure, that's why you're seeing a lot of gold rallying to the upside. A lot of stocks are dropping because people are hedging against that. They don't know really much of what is happening. So they're taking out their stocks just to see it's neutral, to wait and see what will happen in the election period. And then after that, they can always come back in. Remember, these people are not trading like you and I. They're not looking for a quick fix here. They're looking to protect and preserve capital. And that's what we strive to do here at Financial Hub. I never care if someone tells me how I can achieve 100% return, how I can make 1,000% return. Okay, we'll do that in the long term. But what is the risk we're taking? Most people never ask that, especially when they're investing in things like the Eldoret Forex scam. What are you risking? What is at risk? You can see 2 people both achieving 100% return, but another one was very consistent. He achieved that in 1 year. So in average, he was achieving about 10% return per month. This other person achieved the same return in 1 month or 1 week, 1 or 2 weeks. Okay, that means this person was taking crazy risks. So at the end of the day, we are congratulating both people, but we're never looking at what really happened. Did we look at the risk this person takes? So don't just be blinded by returns and lifestyle and all that. Look at the people who are doing it well, those are the people who will survive in the long term. So back to our currencies. Now let's look at a bit of news. What news do we have this week? Last week we had NFP, and let's talk a bit about NFP before we start this week's, because there's a bit of something that changes that most people don't pay attention to. So you can see last week on Friday, this is the trade. I had a trade running here that I took, I believe it was on a Wednesday, and when news came out, it sort of rallied towards my profit side, then all of a sudden fell to the opposite side, and I lost on that Friday evening. So we had non-farm payroll, unemployment change. You can see we had 164 was the forecast, but we got to 142,000. Okay, now this, what you're seeing here, is a revised version. Okay, when you see this happening here, it's a revised version. It means, okay, so I had to do some research for you guys so that you can check. Now, revised version, this is what it means: non-farm payroll employment revisions. Okay, the current employment statistics, CES, first preliminary estimates of employment hours and earnings are published each month approximately 3 weeks after the reference period. Okay, so estimates are then revised twice. Okay, so just because non-farm payroll came out, for what I mean, just because we got this number, it doesn't exactly mean that's the right number. So we had a different figure here. I don't remember what it was. I'll check here. So here we can see, sorry for that. So we can see it was revised. It was down only revised to 89,000. I think before it was what, 100 and something thousand. It was 100 and something. It was revised. Now we can actually see it here. If you come click on this bar, let it load, then let's return this a bit. So we had it before at here at around 170. No, around here, 115,000, then it was revised. Okay, that's what it means. So that also changes, because you see now it was a big revision, and that's what happened. So you can see here we had that jobs, then downwardly of July it was actually 89,000, not 114,000 as we thought at first, or what they gave us. So those are what we call revisions. So that affected the markets. You can see market actually started rallying. Okay, I remember I had a NASDAQ trade. So let's look at that since we are on that topic. Okay, I had this trade running. So you can see here, I had this trade. This is what I was looking for, a bit of some buys here. I was looking for this support level to hold, and it really held for some time. It really held. We actually got a very bullish close. You see this close? It was quite bullish, and I was really waiting for this market to rally. But markets are random. At the end of the day, markets go where the markets want to go. So you can never fight with it. So that happened, and markets fell down. Now, on the other hand, something else happened. There was an account that I had with TFT. Now, TFT went down a long time ago. I don't believe they're going to come back. We've seen a lot of this happening with prop firms. I'm not really in favor of them. I had 400,000 with them. 100,000 was live, 300,000 was in phase 2. When they closed down, when was that? In March. They've come back, yes, but they've never returned the big accounts. The people with $100,000 accounts and more, we've never received our accounts. So what they gave for a short period of time was a free Dragon account, which was a $10,000 account. Now, I haven't traded a small account for some time. Now, there's a problem that actually happened. I actually blew that account, okay? Not because of bad risk management, but because of bad position sizing. Now, I focus a lot on teaching people how to position size, and I teach risk when you come to Financial Hub as well. Now, what I didn't position size wrongly. I just didn't read the contract size of each prop firm. Now, each prop firm offers a different contract size. So it's important to pay attention to this. This is sort of the disadvantage of trading a lot of prop firms together, okay? Or using a lot of brokers. Now, for example, I come here. So I use Cashback Forex to calculate my stop loss, my lot size placement. So this is what I did. So US Tech, I was trading this market. So let's say I remember I had an entry at 6, was it 6? It was 850. Yeah, I had an entry at 18,850, and I had my stop loss at 18,500, which was about a 350 pip stop loss. Okay, I had a $10,000 account. I risked 1%, so I came and pressed calculate. Okay, now see, it normally asks this: what is this lot size? So it wants to know. You can see there, click to enter the contract size, the number of units in one lot. Then click calculate to compute size. So when I press this, you see now this is actually 1. Okay, most brokers have the contract size as 1. Okay, then press calculate. It gave me 0.28. Okay, now I was risking $100, but the contract size that is offered with this broker I was using, TFT, is actually a contract size of 10. So on my other platform that I'm using, FTMO, my funded FX, all those ones have their contract size at 1, but this one has it at 10. When you calculate with 10, you see you get a much smaller lot size. So in reality, I had actually risked 10% of my account, which was 0.28. I'd risked $1,000. Of course, you can see markets went against me. They went to the downside. So I ended up losing that account. So I lost $500. It hadn't even reached stop loss. It had just gone halfway to stop loss. Then I got an email. I was wondering what's happening. Then I just remembered. So the contract, the lot size, trust me, I've never confused lot sizing. This is the first time in a very long time since I confused lot sizing. So when you guys are trading, make sure to check your contract size. So this was a small account. It was actually a free account. I wasn't giving it much attention compared to my other bigger accounts. Don't get me wrong, I don't take it for granted, okay? So I'm not saying it's a small account, don't trade small. I take it, but it was a small account compared to the rest. So this was small lot sizes. I trade account sizes of 100,000 where you're using that lot. So you're getting lot sizes of about 28. Okay, sorry, not 28, 2.8, that's 1%. So you're getting 2.8. So the 0.28, I just thought it was actually small. I didn't think a $10,000 account I'll trade 0.02. I've not traded that lot size in a long time. But anyway, that's what happened. And that's how I ended up losing that account. Which is fine. So it's not a big dent. At least all the other accounts, I still have them. So this happened. And now I'll move forward. I'll continue journaling this. I've not finished journaling it. I haven't gotten time. But yeah, that's what happened. So most of the stock markets actually fell on that day. You can see here, I was actually really looking forward for these markets to hold here. This is US 30 Dow Jones. I was looking for that hold here and markets to rally. We got that rally. This was a quick move to the downside. I believe this was a good stop loss hunt for many people. Markets moved to the downside. We got stopped out. Not only me, but many other people. Also, the US 500 did the same thing. And now you're seeing a lot of them having a lot of recovery in the market this Monday and Tuesday as we start the week. Okay, so I don't have any trade running on that one. I'll still give it time, understand what's going on there, then later on come in and buy or invest in them. Okay, on the other hand, we have GBP USD. Now this and the euro are very bearish. I remember I shared this with the FinHub Trading Club, the community that we have here with the students, and I told them this is a trade that looks very bearish. This market is just bearish. I'll start with the euro and I'll show you why. This market has really been rallying, but also we got to a very important level. Okay, this was the highs in 2023, this before the year came to an end in December. So markets have been in a downtrend, then we sort of come back to that level. Now we can see market had that breakout. So we had a very good breakout. Actually, market had a breakout, and this is on the daily chart, so it's a significant time frame to look at. We had a breakout, a retest, then market started rallying to the upside. As soon as it started rallying, it then got a very quick drop back below this resistance level. We came and retested it, then market closed back below. So for me, that's a very bearish notation. Okay, you want to be more bearish on this one than to be bullish. If you look at markets where they were at above overpriced levels, above the R3 level. So I was looking for these markets to continue dropping. I shared with the team, I told the team this market looks quite bearish, and it's the same thing that you're looking at on GBP USD. Sort of forming this channel pattern, which sort of hit the top. We had that breakout, sort of market tried to rally, go to R3, very overbought level, and you can see market came and closed back below. Just the same thing like Euro USD, especially after this long rally. So I expect a lot of correction to come in on this pair. Excuse me, I expect some more correction to come in as the dollar rallies. Now if you look at the dollar's gotten a significant double bottom here. Okay, sort of a double bottom formation. I'm looking to see whether we'll get a break above this level, okay, the BOS level that I marked. For me, if that is broken, then I'll be very bullish. Markets at a very underpriced level, so I'm looking for more bullish plays on this one, especially if we close above this level to go further up than where we are. So if you look for the euro to continue dropping, I'm looking for the dollar index to continue rallying, and that sort of gives me the narrative on the rest of my pairs. On Aussie dollar, it's more bearish than it is bullish, and USD CAD is more bullish than it is bearish, especially after this strong candlestick close. Okay, so that's what I'm watching on these pairs. That's what I'm looking at. I know I'm not going deep into sharing what is the trade I have or all that. No. Today I'll just share big sentiment of what I'm looking at, general look at the markets and what I'm expecting to happen this week. So those are the pairs I'm trading. Those are what I'm looking at. I have no trade running. I've only taken one trade this month, which was a loss about 1%, which is totally fine. And I'm not pressuring to recover. If an opportunity comes, you never know whether it's a win or a loss. So I'll just wait patiently for the markets to come into my corner, tick my checklist. My students know how strict I am with my checklist, so I'll wait for that checklist to be ticked strictly before I execute any other trade. So those are sort of the trades I have running. How I'm looking at the markets. Remember, here at Financial Hub, we never give signals. We don't talk about signals, robots. Those things are wish-washy stuff. They're for the small boys. Let's grow up a bit. Let's play the big game of how the big players are doing, and that's why I enjoy listening to the likes of Ray Dalio, Ken Griffin, Steven Schwarzman, the late Jim Simons, Stephen Cohen. These are great financiers in the financial markets. Listen to interviews by David Rubinstein. Listen to his, because he's a billionaire and he also interviews a lot of billionaires. Look for the finance billionaires, the Schwarzman, the Ray Dalios. He's done interviews with all of them. He calls them peer-to-peer conversations, billionaire-to-billionaire conversations. He's just being modest, but that's basically what he means. So yeah, do research on those ones, listen to those people, and then get a big idea of how economics run. Listen to World Economic Forum, listen to there's this other one that happens in Dubai. I've forgotten the name. It was started by the Crown Prince. It's an important one. It's for investors. I've forgotten. Next time, I'll tell you what it's called. So listen to those ones. Those are what gives you an economic view of what is going to happen to the dollar, what is happening to cryptocurrencies, what is happening to gold, what are people doing, what's the investments, what are people shifting their minds, where are they moving towards, where is the capital flowing towards. Those are the things that excite us. Those are things you want to look at, not about how to get rich using robots, to get rich in 2 months. Okay, don't have to stress that enough. I know you already get my point. So like I always say, stay woke, stay financially literate. May the peace be with you. I'll see you soon in another video. Peace.